following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things option. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And we got a fun one in store for you today. A lot of action to actually talk about, which is a nice, refreshing change of pace today. Sitting in on the old RCM hot seat, he is Kevin Davitt, the Energy and Metals Major Domo over there at RCM Asset Management. Kevin, welcome to the show, sir.
Thank you for having me.
Glad to have you. Glad to have an official RCM Chicago guy as opposed to the Miami guy who's going to be subbing as a Chicago guy pretty soon and buying every long coat he can imagine, probably, and a heavy coat.
That's exactly right.
All right, and also joining us from the frigid parts of the country, the not so frigid right now, he is none other than the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the show, sir.
It is fantastic to be here. It is actually kind of a balmy 80 degrees, 79, 80, perfect August in Maine. I have not had any lobsters today, but I did have a parcel of them this weekend.
A parcel? Is that the official lobster term, like a pod of whales? A parcel
I
of lobsters?
I think actually they come in a bushel. No, they're by the pound. They just come in by buckets, and, the fishermen will throw them at you if you're hanging out on the dock, but normally most of it's pre-sold. So
you head on to the old farmer's market. I'll take a bushel of them there apples and a bushel of lobsters to go. That's what you say, huh?
Something like that.
That's
yes.
the Maine way. I can't do a good Maine accent, so I won't even try to approximate it. But
well, yeah, you got to get there from here. You go over there a piece, go around the tree, and then look at the other tree.
It's like Boston, then you add a little bit further north to it, I guess. That's the only way to describe it.
It's just Boston to the right of, the honky-tonk.
Yeah, to Boston to the right of Quebec, and there you go. You have yes. Maine, literally and figuratively. And last but not least, joining us back in full fighting form, he is the Viceroy over there at Options Express, otherwise known as Mr. Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, if I knew this would be my return greeting, I would have taken another day off.
Oh, would you like something a little bit more elaborate, sir? Perhaps a song and dance? I can arrange that if you like.
No, I'm talking about the market.
Oh, yeah. It didn't exactly greet your return with open arms. We shall get to that momentarily now that the team is assembled. We shall keep on rolling right on into the trading.
The Trading Block.
All right, and welcome to the Trading Block. And you guys know how this works by now. We've been doing it long enough, coming up on 3 years. Crazy to believe that that's the case, but yes, we have been doing it for a while, and this is, of course, the Trading Block, where we break down what's moving, what's shaking on the old street today, both from an options perspective and perhaps a little bit broader as well. And as Alex alluded to, on the old street, it was not exactly a friendly greeting for the return of the Viceroy. Most of the major indices selling off pretty heavily today. The S&P down about 1.4, the Dow down a little more, 1.5, and the tech-heavy NASDAQ leading the charge to the south, down 1.7% on the day. The sell-off was so aggressive, it even managed to take some of the icon bloom off of the Apple Rose today. Apple actually closed a little bit down fractionally on the day, as opposed to the sea of green it's been seeing and the ridiculous rally that's been going on out there. We'll get to that a little bit, but of course, the broad sell-off, a lot of that triggered by the broad inflation fears that are starting to have a lot of people worry about the Fed easing even more aggressively and starting it perhaps a little bit sooner. That, of course, sent shockwaves through the market. Everyone knows the Fed and inflation are like oil and water. The second they see some hint of it coming out of the CPI numbers, everyone gets spooked and the market leads the charge south. That's what happened today. Of course, it didn't help that Cisco came out last night and really just knocked out of the park from a negative perspective. They were off well over 10% in the after hours, and I believe, and they closed today down about 7%, closing today at about 24.5, roughly, down over 7%, or nearly two handles on the day. It's nice to not have Uncle Mike here just because we can talk about Cisco. I don't know if you know this, Kevin, but Uncle Mike has an open wound that is called Cisco, and he refuses to even speak of it lest he have flashbacks of the horrors.
I didn't know about that, but at some point I will salt that wound.
Yes, you need to tease him.
Get over it.
The next time he's in the office, just walk up behind him and whisper, Cisco, and then walk away. And you'll see him get into cold sweats and start shaking.
I will do that.
But yeah, they spooked the market with their numbers, obviously missing the estimates, and of course talking about layoffs. Layoffs usually ease some of the pain, not in this case. The street really sending them down. Of course, they're still well north of where they were trading. They were trading the 15 handle for the bulk of earlier in this year and into last year. They've been in that range for quite a while, and now closing today at 24.5 roughly. So still, given the aggregate, not a bad run up and not a bad year so far. For Cisco, of course, rounding off the trifecta of awesome was Walmart. They're off about 3% in the day as well. And the market can never rally on a day when Walmart has bad earnings or disappointing earnings. I always joke about if McDonald's and Walmart can't make money in this economy, then what is left for the rest of us? And certainly Walmart's painting a relatively dim picture as well today. So Fed fears, inflation fears, Walmart selling off. That's going to weigh on the market on any given day. So that's kind of what we saw today. Maybe we'll start with you, Mr. Alex, since you're back and in fighting form. You said a lot of stuff was lighting up the tape, as I could imagine, on a day like today. What, if anything, really caught your eye or the desk's eye in today's activity?
Short covering. This morning the phones were ringing off the hook, yet it was short covering. And I asked the guys on the desk, the guys and the ladies on the desk, was it anything specific? And they kind of rolled their eyes and said everything. It was just across the board. People covering shorts in stocks, people buying back short puts, people putting new long put positions on. A lot of activity in the metals today, in the metal ETFs. And the futures guys thought that they were seeing a lot of new positions, a lot of new folks coming into the market with new positions. And it was everything from the micro futures to the full-size futures to the ETFs. Little pop in oil today. We kind of talked about oil a little bit with the futures guys, Mike and his crew, and I said, was that short covering? And he kind of looked at me and said, no one's alive who was short oil. These are just straight long positions coming on, and some of it is driven obviously by what's going on in Egypt and talk about, don't worry, the Suez Canal will be kept open, but clearly markets are getting spooked. Rates, as you said, the Fed, as you said, but what's going on in Egypt can't be helping circumstances.
And Kevin, you're going to be our resident commodity guy on the show today. I'd imagine a lot of your interest, a lot of your activity was focused on the metals as well. Of course, silver up about 5% today, gold about 2% or so on the day. So a lot of action, a lot of interest in the metals. Were those catching your eye a lot today as well?
Yeah, absolutely. Like when you guys allude to the weight of the equities, most of my board is green today, with the exception of the equity indices and bonds. Pretty much everything in my world is green, save for the U.S. dollar. And I think this today was interesting no matter where your focus was, be it individual equities, the story names there, or commodities across the board. So if you couldn't find something interesting to focus on today, you got to find a new way to try to make a few bucks.
Yeah, you're right. It was interesting, and of course that is interesting in of itself. What you said about the sea of green and the commodities, and you're right. It is true. Looking at all my various quotes and screens here, and I know that's been a lament in the commodity realm for quite a while. That correlation has increased across the board to the point where people who are looking at these products to diversify a little bit are not getting that bang for the buck, because they're all moving essentially in lockstep or pretty darn near close to it. So a day like today, I think, has to make a lot of commodity investors happy, because they are getting what they're paying for out there in many respects. They're getting that at least somewhat negatively correlated movement that they've been looking for quite a while.
You're absolutely right. That pretty much one-to-one correlation for the better part of the past 3 years, I think, started to break down earlier this year when you saw emerging markets lag. So that began, in my opinion, in February, and it sped up in March. And I think probably the best example in the past few months is you've seen a considerable divergence between the energies and metals. Now, with the energies leading the way and the metals lagging, you saw that happen in spades in April, and you are seeing that reconciled a bit over the course of the past 3 weeks with the things like the crude silver ratio or the crude gold ratio compressing. The S&Ps versus gold, things like that, have made very big moves. And I think markets like this are a little bit more what guys like myself that came up on the floor years and years ago are used to, where you're rewarded for picking relative outperformers or underperformers, and you can look for the relationship stuff that looks stretched, where there is a correlation you can point to, and something looks cheap relative to another somewhat similar product. And so I'm excited to see not only days like this, but stretches more recently where things are performing a bit more on their own merit. You're going to continue to see, like you alluded to in the beginning, the heavy Fed presence, and you're seeing it today with taper talk after fairly good continuing claims numbers, and the expectation that a month from now, when we have the next Fed meeting, that we will see them step back. But this type of pickup in volatility is something that option guys, futures guys, I think we should all embrace, because it's better than a low volume, no vol grind higher, in my opinion.
Yeah, and these are great markets for a guy like you, because you're right, they tend to reward someone with some expertise as opposed to the rising tide lifts all boats. I'm just going to throw it all over the commodities, and hey, I'm a genius.
Right.
That's not exactly banner markets for guys like you. So these are certainly that reward a little bit more nuance, a little bit more expertise. Let me ask you, have you been hearing that lament from some of your clients and people coming into you saying, hey, I've been adding commodity exposure for this specific reason, X, and I'm not getting that? Has that been kind of an issue with some of your clients over there?
By and large, my focus and the guys that I work with is to try to identify relatively shorter term opportunities, whether it's from a volatility standpoint, from a relationship standpoint. You guys on the equity side, where you can, and I don't say that derisively with the you guys.
Watch your tone, sir. You are
right.
Outnumbered here. I remind you.
That's my first warning. Duly noted. But when you think about commodities as an asset class, was something that was easily grouped together, I think, for far too long. And of late, like you said, you are being rewarded for knowing a bit more about the grains or about the metals or about currencies as they begin to central banks step away, and these things have to operate without the training wheels on all the time. So my short answer would be no, not really. This is a market that will continue, I think, to reward knowledge, and that's something that I would embrace.
And lest we forget the man from Maine, Mr. Andrew, what was catching your eye in today's tumult of activity?
Well, just a couple things. One is how much the market moved with how little the volatility moved. I mean, the vol was up, VIX was up, 169. I think it closed near the highs of the day. But, we did have a pretty good sized move there. 1.5% is, over 20% vol. So, the market, I don't think the volatility market could get out of its own way. And I'm just looking at the tick chart right now, but I want to make sure that it closed somewhere close to I'm pretty sure it closed at the top of the range. I took my eye off it for at the end of the day, but it did. It closed near the top of the range. At around 1473 or something like that.
Which is something we haven't seen in a while. Usually it eases off a little bit or tends to move off the extremity of the move, and yet closing towards the high is actually kind of interesting.
Yeah, I mean, I'm seeing 1476. I don't know if I'm getting the right print here, and the high of the day was like 1486. So it printed fairly high toward the end. The thing was, though, is the volatility futures didn't move at all. The August settlement future, which is settling Wednesday, I mean, we only have a few days left. I don't think it barely got above 14 today. So 14.22, I think it just rallied 22 cents at the end of the day. So that's the market, that's the volatility market saying, hey, I don't think we're going to really settle above 14 on Wednesday. So I don't know how many more Fed announcements, or they actually, not Fed announcements, but I get it all confused now because it really is just all a Fed announcement now, isn't it?
Yeah, pretty much.
But I thought the market had shaken off the fact that, they were going to taper. I mean, it seems to be a foregone conclusion in the bond market. Like the treasuries have just been slowly, as we've been talking about for the last few weeks, those yields are going up. Bond prices are, getting clobbered a little bit. And it feels like at least that part of the market, the bond market is always smarter than everybody else. They're slowly getting out of them, which to me means taper. Of course, the equity people are last to know. And I think that the strength of, stronger job numbers, almost everything that's killed the equity market, what's funny is job growth. So we've been in this like bizarro land where good news is bad news and bad news is good news. The reason why volatility actually didn't fly, I think, like maybe to 17%, 16, 17%, was the fact that there was good economic news underpinning this market sell-off today. And what you end up getting is, okay, so there's good economic news, so the Fed's going to taper. So on balance, you kind of have a good and a bad, and they should cancel out, which means less volatility, which is, I think, what's happening. So there was a pretty hefty future premium the last couple days. I think now all of these announcements, it feels like, are getting more important, right? As we get into the next FOMC meeting, I can't see how they don't scale back. At some point, they're going to have to scale back. I mean, it's getting ridiculous at this point.
Yeah, it's kind of weird because we had to it was kind of a done deal earlier. Then Uncle Ben kind of soothed the market with that more, I guess, conciliatory talk, and the market rallied a bit. But you're right; it seemed like it was baked in.
That was the worst thing he could have done.
I agree. I still don't know why he really did that, because it set us up for a day like today. Now it seems like where everyone's like, wait a minute, we really do have to trim back.
Right.
And
the last time this happened, I mean, we sold off about 3%, which is about what we sold off now from the high. What are we just trading? Little over 170 in the SPX. I just pull a little quickie up chart here, SPX. So we're down 40 handles. We're not quite down. We're not down a full. We're down 1.5% today. So, I mean, we've sold off a little bit. Nothing like the level we got to in June when we actually, what do we get to? Right around 1,600. So, I mean, I'm going to be realistic here, and I don't think another 60 handles down is unrealistic if the market starts to freak out about this taper again.
Yeah, they were this freaked out about inflation.
Things tend to go where they've gone before.
You know, speaking of course, records, and going back to the VIX for a second, as you're talking, I was just pulling up the numbers here for today, and it cracks me up. They were a smidgen, they were a hair short of another milestone, another record, another press release that would have been clogging up my inbox tomorrow. They traded 999,867 contracts of VIX options today. You think someone at the SIBO would have seen that towards the end of the day and been quick, buy a couple hundred worthless puts here just to put us over the top, so we could have a press release.
$1 million.
I know they were 133 contracts off of $1 million. If you're curious, listeners, that's nearly 2x the ADV that's going out right now, and that's even that level is inflated, so it probably really is closer to 3x the typical real ADV. So yeah, that's a banner day for VIX contracts, and you could see why so much of what the SIBO is doing these days is VIX focused, because this is just where the action is, and where the rest of the industry is kind of reporting middling numbers for the most part. VIX and VIX futures seem to be the only place that really is a bright spot for anybody these days. All right, and speaking of bright spots, it's time to keep on rolling into what for me is always a bright spot of the show, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block. This is the portion of the show where all of us here don our fancy fedoras and take a peek, a sneak peek, if you will, into the seamier side of the options business. And speaking of that, we're going to kick things off with an interesting one. You know, we're always talking about different trades here and profiling different activity on the Odd Block, and every once in a while we say, that's an interesting one. We're going to file that away in the to be continued, the to be monitored department to see how this one performs. And listeners, if you remember back about, a few weeks ago now, back to July 29th, the show we recorded on July 29th came out the following Tuesday, the very next day for you guys, which was the 30th, of course. On that show, we profiled some unusual activity in AEO, which is, of course, American Eagle Outfitters. At the time, we reported what was really weird about it was that AEO was reporting earnings on the 21st. Yet we saw someone coming in just loading up about over 5,000 at the time of the AUG-19 puts. At the time, AEO was trading around that 20 handle, and someone was loading up with, and these were weekly, so these expired on August 17th. And the really weird thing about it was the large amount of size, 5,000 contracts. That's a significant amount in a name that does little over 2,000 a day. So you're talking over 2.5 times the ADV. That in and of itself is unusual. Then the fact that it was done prior to earnings, you might expect to see this going through earnings as an earnings play or a hedge on some long underlying guy going through earnings. This guy was loading up on stuff that expired 4 days before the earnings announcement. That's very bizarre. That's usually somebody who might know something. And then sure enough, surprise, surprise, guess what happened? On the 5th, so about a week later, AEO came out and lowered their guidance, and surprise, surprise, again, the stock got cut from 20 down to 17 pretty much overnight. Closed today 16.5 roughly. So this guy was very well timed. All of these AUG-19 puts are looking now very substantially in the money. This is the kind of thing that certainly makes you scratch your head and say either this is an equity holder or an outright spec. Either way, this guy was probably privy to something very interesting or inordinately concerned about a very, very near-term downside correction in this name. But I don't know. Mr. Andrew, I think we can pat ourselves on the back on this one. This was indeed some unusual activity that panned out quite well.
It sure did.
You can admit it now. It was you. You're highlighting your own activity now here on the show.
You know what? I need to be, well, you know, the good thing about this kind of stuff is you can piggyback off it but we've also seen plenty of this stuff go out. You know, we have seen some of this stuff go out worthless as well, but this was definitely it was almost too aggressive for them to be wrong. I guess you could say
exactly.
that.
And even if you piggyback on it and did it the way we outlined here, which is what we always counsel here on the show, which is take advantage of the distortion caused by these unusual trades. So if you're going to do this, do a vertical, sell the strike they're buying, and you could have legged in to that 19-20 put spread for a ridiculous price, and you still did really well. So you can't complain if you listen to that either. Either way, you're coming out the winner. And what's really interesting about this, too, is that these puts are still open on this strike, which kind of makes me think this is probably an underlying guy. Either that or he's someone who's really waiting until the last minute to wring out every cent out of those puts.
I guess after seeing, the rally today, there's not a lot of worry about but the thing is this is like a guidance issue, right? They don't always just come out early and give guidance, because he was a couple days short on this,
Exactly. That's what made it interesting. If this was just somebody buying 5,000 puts through earnings and the earnings came out bad and the stock dropped, that would be interesting, but not as interesting as this. This is clearly someone was concerned about something very specific. I think if I were a regulator, I would certainly be sniffing around this one and saying, who's sitting on a bunch of underlying that would like some nice, very, very near-term hedging, because that certainly seems like the case. Either way, if you know something, you trade ahead of time. Even if you own the stock or not, doesn't matter. Still going to ring some alarm bells, I think. If I were a savvy SEC guy, I might be sniffing around this one. All right, next up, not to impugn anyone. Of course, this could be just very innocently timed, though the skeptic in me says perhaps not. All right, let's move on to some of today's activity that we saw. This is a crazy one, just pure size. Huge. This is just ridiculous. This is the ETF out in the old home builders realm, the SPDR S&P Homebuilders ETF. Ticker symbol XHB, closing today $28.97. Pretty much roughly unched on the day, but the options weren't unched. Not at all. This is the name that's doing 17,000 contracts a day, doing a clear 100,000 today. This is just some size paper. Andrew, I'm already tired from that first one we just ran through. So why don't you walk us through what was lighting up the tape here?
You're tuckered. You're tuckered out. This was a block of 50,000 traded right in the middle, of course, which makes it very difficult. Like in the old days, 50,000 would not trade in the middle, but somehow they do nowadays.
Amazing how that works, huh?
Amazing how it works. Lots of blocks went up on the bid offer. There's almost no open interest. I mean, relative open interest. I would have to think if you're a buyer of these options, that's a pretty aggressive bullish trade.
We should even dial it back. I didn't even get a chance to tell people what it was. They were SEP 30s.
SEP 30s, they're a buck out of the money.
Yeah.
Now, one thing is good economic news has been better for the home builder. So on a day when the market was in the ash can, this index was up 4 cents, which, is playing like, 2 under par or something like that against the field. So it was a very good day for it. Very smells like a buy right. The vol kind of popped a little bit. And since it all went up mark spread, I think it's tied to stock. And that's what really it feels like. But really, that was the only relative trade in the whole, in the whole class of options. You just have this one big blob trading right at the 30 level. There was also some paper in the 31s and 32s, and that paper as well. By and large, there was a lot of buying. So it's a lot of two-way stuff. A lot of people scooping up. I don't know if it feels like that might have been liquidity provider hedging because they're short so many of these SEP 30s.
You got to pick up something after a trade like this.
It possibly could be. So my guess is buy right, but that is just a huge purchase, and they're up 10 cents from the trade price.
So probably the buy right on at least that first 50,000 that went up. 73,000 going up total, maybe a liquidity provider hedging some of the other bits there to take it off their books. And of course, listeners, you remember our talks about synthetics. If you don't, you buy call, sell stock. You're long a put, so not exactly the overwhelming bullish indicator it might look at on first blush when you see this one going up. So
it's very tough to gauge the intent on this one. So I said, it should. that was a strange thing. On balance, it feels like it should have been buying because the volatility in a fairly quiet name was up. Was up. It's relatively substantially, and there was buying into some other out of the money strikes. So, maybe you're going to see more out of the home builders here. I don't know. With interest rates possibly ticking up, I don't know how you could see like the easy strength, but again, went up a spread. I think they're buying the calls, and it could be a synthetic, right? So that's what we got.
Interesting one. Of course, looking at the chart here on the home builders, this is, they're flirting at the upper end of their range, so this guy is leaning bearish. It's not exactly too hard to see where he's going. Of course, you're right, though. Home builders could be looking up in the near future, so it might be an interesting bet from that perspective. But interesting one just from a pure size. Kind of a bit of a puzzler, too, just to scratch and see what actually went up. At least some of it went up. It looked like tied to stock, which changes the perception quite a bit. Speaking of changing the perception, this is a name we talked about a bunch of times here on the Odd Block and on the show in general, just changing my entire narrative around them recently. This is, of course, Microsoft. They were the dog of the bunch for a decade. They were, like I've said many times, the premium seller's dream. They never went anywhere. They never surprised through earnings. Microsoft, they were the dog of the last decade. They never really went anywhere. They were premium seller's dream, never really surprised through earnings. The last couple of quarters, that narrative's been changing. They've been moving quite a bit, and we're seeing some interesting activity lighten up the old tape in Microsoft. The name, of course, down like pretty much exactly in handle with the street, down 1.7% today, closed at $31.79, and it was a heavy day for good old Softy as well, they've averaged of late about 160,000 contracts, and that's reflecting some of their inflated activity, at least of late. But of course, they blew past that today, doing a whopping 340,000 contracts today, and not a ton of it, but a fair amount going up in this one three-legged spread versus put quasi-combo. I suppose you can call it a bunch of different things. We saw the Jan 2014 28 puts going up against the 32-36 call spread, going up for a net of 57 cents, a whopping 10,000 times. If you're doing the math at home, listeners, that's a total of 30,000 contracts. So a fairly substantial trade. Mr. Andrew, walk us through what exactly went up here. What did they buy? What did they sell?
I think what it looks like, it went up marked basically about the 32-36 call spread in Jan 2014, and then they sold the 28 put, which basically gets them a cheapy call in Microsoft, and selling I think about the top of the price range for it. So not a lot of risk in Microsoft as a stock. It could go below 28, but I think it's a fairly cheap way to get long, and it's loaded with upside potential. I mean, they could get a 5, 3, 4, 5 times their money for this one. It's could easily go to $2.50, $3. So
it's like they did it on a pretty sizable ratio too, and nearly 40,000 of those 28 puts going up total versus 16,000.
It started just as the 10,000 lots. They could have been trading more. But the volatility in Microsoft is a 1-year high. The volatility right now in Microsoft is higher than it's been even through the earnings cycles. So there's just tons of paper buying. I don't know what the deal is. So
it's suddenly moving. People are like, wait a minute, that's movement. We got to get in on this action.
I guess so. I mean, it's been moving around a little more. I really don't. I don't have an answer for it. There's some rumors that the new fixed Windows, people like it, which kind of, I think that was a problem. They had to write off the whole Surface thing, and maybe now they improved the software in their tablet. I don't know what the deal is, but whatever it is, it's jacking the volatility, to 24%, or what is it? 28, traded 27% today in 30-day volatility, which is.
Yeah,
which is not small for Microsoft.
I think moving nearly 2% a day now, or at least recently it is. So that's a whole new Microsoft we're looking at there. And there's news coming out of there now. Their one big product. Of course, you mentioned the Surface. They did the Windows 8. Their one few product that actually makes money outside of office, of course, being the entertainment, the Xbox division. They've had a bunch of missteps and executive turnover in that area, so that's been moving the name as well. So a lot of craziness out there actually generating some of this premium out there, and Microsoft moving as an example. Of course, this has gotten me back interested in Microsoft again. I haven't touched it in ages, aside from the occasional screaming premium sale because it would never move. But aside from this, now this actually makes it much more attractive to me, and I'm sure to a lot of our listeners as well, which is why we like when these little crazy trades light up. This ratio is kind of crazy too. I'm picturing a guy in my head who's putting on this thing 10 by 10 by 10. And he says, "Wait a minute, if I blast out another 10,000 of these puts, I suddenly get a credit. And now if I do another 10,000, all of a sudden I'm printing money left and right." I can just see the little light bulb going off in his
money
head.
Everywhere.
Exactly. I've seen enough of these guys do that to make me wonder. But either way, an interesting trade nonetheless. Looks like a big ratio. Call spread, financed, or even just completely collecting money on with these puts. I don't know how it netted out, what ratios he did here, but an interesting trade nonetheless, and a type of trade we like all the time. Instead of just buying the out of the monies, do it a little bit more sophisticated, or should we say, doing it in a little bit more sophisticated fashion with this vertical, financed, perhaps somewhat aggressively, buy these downside puts. I like it. Good stuff. Fun stuff to talk about today, Andrew. It's nice when we have some fun stuff in the odd block, including that American Eagle. That's just crazy, crazy stuff. I would be certainly taking a peek at those again.
Yeah, I have to give Mark credit for that one. He wrote that one up when I was out. So.
Oh, don't give the guy enough. He gets enough credit as it is. We already got someone writing into the listener block saying how they love him, so he's going to get a big enough head this episode already without adding more love.
Well, you know what I'm going to do? I'm going to take my Fedora app and I'm off, and I'm going to put on my my Viceroy hat.
There we go.
Whatever that might look like.
Because it is time. Yes, Andrew's even doing the throws for me now. I can just retire from this one. I'm done. Because it is time, once again, for the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody. You know him, you love him. You missed him on Monday when he couldn't make it, but now he's back with some scintillating insight into the world of OX. Mr. Viceroy, take it away, sir.
Thanks, Mark. The first piece of news in the world of OX is single leg WalkLimit went live. It was scheduled to go next week, but it has gone live and is available to those who might be first-time listeners. The WalkLimit is a feature here at OX that essentially allows you to work an order at prices between what would be the naturals. So WalkLimit allows you single leg. Let's say you're buying an option and the market is 145, 150, allows you to put the order in and say, let's try to buy it at $1.45. Leave that limit out there for, you can set the time limit, leave that order out there, cancel it after a predetermined time, walk it up to $1.46, go through the routine again, walk it up to $1.47. And eventually, walk it up to a limit that you want to leave a resting limit order for. So if the market was 145, 150, and your upper limit was $1.48, you can set WalkLimit to do the $1.45 auction, $1.46 auction, $1.47 auction, $1.48. And then it'll leave a resting limit order at $1.48, which you can always come in and cancel if you don't want to leave it there. No cancel fees, no extra charges, but the PD people, the product development people, brought it out a week early. So very exciting because that's one that people have been anxious to see coming out.
I think so many people were writing into the show. That's why they accelerated their timetable.
Yeah, well, that's it. The show is the pivotal influence here. I mean, we sit in meetings and say, what does Schwab want? And people say, well, put that to the back burner. Let's see what they want on the option.
Forget that Chuck
Insider.
Schwab guy. Someone in Minnesota wrote in about single legs. We got to get it going.
Yeah. And 2 Schwab people are now putting pins in the Alex style. So, but it is actually a tool that people have embraced. I think on last Thursday's show, I quoted $80,000 a day improvement over the NBBO for WalkLimit, and that's an impressive number. And now that it's going to be in single leg, especially in markets we've had the last couple of days where you might have 2 or 3 orders in the marketplace and you can't keep your eyes on 2 or 3 screens, this kind of does it for you. So very excited about that. We were expecting to see it next week. The other thing that's going on here is Apple has become the poster child for option trading again. For the last few weeks, we talked about Tesla and Netflix and a lot of the other names. Apple is back in the number 1 spot. The 13Fs, the end of June quarter filings that are coming out from the large portfolio managers, everybody with over $100 million has to file 13Fs. And the 13Fs are showing lots of appetite in Apple. Apple was bought by a fair number of prominent hedge funds. Of course, the other 13Fs showed Paulson covering half of his position in the GLD and how painful that was. The other thing that's showing in the 13Fs is there's been a lot of put buying in the last quarter. So it's clear that some people are either looking to lock in gains or hedge. And overall, we were busy today, just across the board busy. And as I mentioned, it was short covering and a lot of new positions in the metals.
Sounds like OX and good old Chuck Schwab might want to cut a check to Mr. Icahn for kicking in some good old trading activity to Apple and driving it back up over 500. You got to love how that works, where you can buy something and then announce it to the world a little bit later, and magically it goes up. That's not a bad deal to have, shall we say. Legalized front running essentially is what that is. You can front run yourself.
It's nice to be Carl Icahn.
Yeah, it does. Of course, Apple, you're right, vacillating on that 500 handle. That, of course, brings a lot of people back into the action. I won't even bother waste your time with it, Alex. I may as well just toss it out there really quickly. Has there been any appreciable interest at all in the minis with Apple in this movement, or is that still pretty much dead in the water?
There's still a disappointment. Apple and Spider have been the 2 names where there's been some activity, but the market quality is still very disappointing. And there's that catch-22, at least on our screen and on the Schwab screen, they quote on the same page, and it's real easy to kind of toggle from the mini back to the full-sized option. And you look at the full size and you look at the mini and you say, those markets are less attractive. Why would I do this?
That's a charitable way of describing it, sir.
I'm being polite.
I would say, who the hell would want to trade that? But that would just be me, using my less than charitable description of that. But yeah, interesting stuff. Apple, once again, on the old radar. If Tussar were here, I'm sure he would regale us with many stories of Apple trading and ins and outs. We'll have to wait till Monday when he returns for that. But now we're going to keep on rolling right on into my personal favorite segment of the show, because it's your segment. It is, of course, the Mail Block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, of course, welcome to the Mail Block. This is where you, the listener, get your chance to join us here on the old program. And today's question is actually more of a comment. It's from someone who came out on our website via the handle NRL Build, Neural Build. I don't know how you should say that, but either way, he's commenting on our most recent episode. If you don't remember, listeners, and Andrew and Alex, and actually Kevin, none of you guys were here, we went on a little bit of a rant, Sebastian mostly, I kind of got him started though, so it's partly my fault, about Motley Fool's options services, in particular the options FAQ section, where they had just essentially a screed about why you should never use options. And I pulled out a few tidbits, including the fact that they essentially say, why would you ever buy a put on a long stock? Because then you're betting against yourself. And if you are considering buying a put, you should really liquidate that position, which echoes, of course, what that money manager said about a year ago when we talked about it on the show as well, and we kind of took some shots at him. So we took some shots at our friends over at The Fool as well, and our friend Mr. NRL Build wrote in to defend them. He says, I enjoyed your show as usual. Always fun to have Mr. Sebastian on the air. I guess we can agree to disagree on that one. Mr. Sebastian. He goes on to say, I feel the need to stick up for Motley Fool a little. I have been a member since around 2000 and have been in 2 of their options services since 2008. They actually have some good stuff with respect to options. I think even you tough veterans would agree if you understood their offerings a little bit more. Unfortunately, the Fool universe is so large and varied, not unlike Seeking Alpha, that there is often as much junk as there is quality. It really depends upon which specific Fool service one subscribes. I have never understood why they don't control that more carefully. Anyway, if it wasn't for them, I never would have come to options in the first place, and now I found you guys. Carry on, Ned. So I guess there is a silver lining to this story in that he discovered us here on the option block and, of course, on the old optionsinsider.com. A great comment, Mr. NRL Build. I don't usually like to bash fellow outlets for the most part. They all do their different things and they're entitled to their opinions. That one just seems so stark. And from an outlet like Motley Fool, I do expect a little bit better. But you're right, it is a many and varied outlet. They have a bunch of different services, sometimes offering competing advice, which is probably an issue you're right, they probably should take care of in-house, have a little bit more control over their disparate offerings out there. We were referring to something that probably was actually a little bit dated out there by now. It was some sort of options FAQ type documentation, and that's where I really just found that, and it kind of just set off my alarm bells because I've seen that kind of talk before, and it always concerned me. But we're glad to have you as part of our network now, even though you do like Mr. Sebastian, so chalk that one up for him. And, of course, if you'd like to join Mr. NRL Build and all the other people who write into our great shows here, then, of course, surf on over to theoptionsinsider.com. You can leave a comment on the show notes, just like Mr. NRL Build did here today, or you can find us on Twitter, twitter.com/options, or, of course, Facebook, our newly revamped and still in the process of being revamped, facebook.com/theoptionsinsider. We've combined all of our many different presences. Talking about the Motley Fool having disparate things, we had many disparate Facebook presences, and it was very confusing. So we've since combined them into one. So hopefully that's a little bit less confusing for you guys. You can find all that at facebook.com/theoptionsinsider. Leave us some questions there. Or, of course, the old-fashioned way. A lot of you still love to hit us up via email, questions@theoptionsinsider.com. Just be sure to put in the subject line the title of the show that you are referring to, so you can join your friends here and be featured and become famous or perhaps infamous here on the old mail block. But now it's time to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, listeners, you know what those car horns mean. They mean that it's time for our final segment Around the Block, where we peer into the future, give you a little bit of a hint of what we're watching on our screens for the rest of this week into the old weekend. And perhaps we'll start with you, Kevin, since you are the newcomer to the show, at least for the last few months, from the RCM seat. And we don't get a chance to dive into the futures realm, perhaps as often as we should here on the old show. So why don't you go ahead and tell us what you're watching here in the futures realm for the next few sessions going into the weekend.
Sure. I think that there's a whole lot of things that could be on anybody's radar. Front and center will continue to be the bonds because, like we've kind of hammered on this show and probably you have in everyone past, rates are going to play a big role in the whole kind of macro outlook. The 10-year yield traded to levels last seen in July of 2011 today. You talked a lot about the home builders, the run they've been on, and some positioning lately. There is absolutely a correlation there. So watch the 10-year, watch the 30-year, watch how that whole curve moves. If you are a metals guy, you could argue that gold today took out its recent highs. I would be a little bit cautious because some of the move today looked like perhaps some panic short covering. The options activity in there doesn't look from a skew standpoint like we necessarily made highs. So depending on your risk appetite and time frame, you have seen a considerable compression in the gold-silver ratio, with silver outperforming. Copper has done very well lately. I think the metals should continue to be on guys' radar. With the indices, I will absolutely be watching the 50-day moving average in the SPOOs, which is about 5 handles below where we are right now. You got 2 days in a row where equities closed on their lows. It's been quite some time since that happened. You guys alluded to the Walmart move, and the last time Walmart warned, which was like mid-February, you got a 3% pullback in the SPOOs. At this point, we got 40 handles, like you guys said, which is like almost 2.5%. Beyond that, the currencies are interesting. You saw a big move lower today in the dollar. It's hard to say whether it was the metals or whether there was a wag the dog situation, but we continue to hear speculation about who the next Fed chairman will be. And that was one of the rumors that kind of ran across our desk today when the dollar got whacked. From my vantage point, something like that would kind of lend itself to Yellen being back maybe in the front of that race, but I don't think that's something you can really position based on. So that kind of quickly wraps it up for me. It also looks like this week perhaps the grains put in bottoms. Time will tell, but there almost isn't a market that shouldn't be on your radar, given the volatility pickup we've seen over the past couple of days, and the moves, the just front month flat price moves across the board. There are interesting levels in the energy complex, crude, both of them. You got Brent back up at 110. You got gasoline at the high end of range. You got the metals maybe breaking out, and bonds, like you guys said. So much money in the bond world and so many years of yield chasing. I think you have to start there and let the rest of it kind of fall into place. So that's my 2 cents looking out a couple of days to a couple of weeks.
Yeah, it really is an embarrassment of riches in the commodity landscape right now. You could really just pick your poison, and they're all moving, and there's some attractive activity, some attractive vol in all of them. We should, of course, tip our hat to your colleague over there, Matt, who's been on the show the past couple of weeks and was beating the drum about silver pretty hard. Silver, of course, up 5% today, leading the metals charge, and up about 20% over the past few weeks. So it's been quite the rally out there in silver. I know a lot of our listeners love SLV. I'm sorry, Kevin, they're not as much into the big futures. They're getting there. They're getting there more and more.
That's quite all right. One leg at a time.
Exactly.
You know,
SLV is the gateway drug to the big futures. They start off with SLV, they dip their toes in the waters, and then they graduate to some of the bigger, meatier products over there at on this futures and futures options side of the fence. So yeah, interesting stuff going on out there as well. And Mr. Viceroy, I know you've been out for a little bit, but now that you're back in the swing, what is catching your eye here for the rest of the week, sir?
I think Kevin just covered every base that I had in my notes and did a really good job of it. And I think that's it. I think we're looking at the 10-year. We're looking at the pop in metals. But all I can do is reiterate what Kevin said. I think he really did it was kind of a terrific look at what we're looking at. There's a little bit of earnings going on. Dell came out while we were talking, and I don't think it surprised anybody. JCPenney next week, and I think there's 2 camps there, and one camp is really expect them to disappoint, and the other camp is, kind of meh. Who cares? Let's see how much longer they can live. But, I think Kevin said it all.
Correct me if I'm wrong, it wasn't JCPenney the chain that brought on the Apple retail visionary in an attempt to turn it around, and it really kind of flustered and failed, or should I say fluttered and sputtered and kind of went limp?
Yeah, as we say in the brokerage industry, the former visionary.
Exactly. When I heard he took on that gig, I was like, well, he's a courageous fellow. He's not going to ride on his laurels. He's going to probably take on one of the most challenging jobs in retail and see if he can make it happen. And it doesn't seem like anyone really can make that happen, particularly when you're not selling products that are a couple $1,000s a pop. So your cubic foot sales and square foot sales are through the roof. You have a lot of soft goods and other things in JCPenney that make it a little bit more challenging from a retail perspective. Interesting stuff. Thank you, Alex. And last but certainly not least, Mr. Rock Lobster, what's catching your eye here in this embarrassment of riches from an options and a volatility perspective?
I can't disagree with the other Alex on agreeing with our new guy, but just I'm looking at bond prices. I'm looking at them kind of tank. I'm looking at yields going up. And what we say on this show over and over again, the bond market is usually smarter than the equity market. And bonds have been slowly deteriorating because yields are going up, because I think the bond market's expecting the tapering is going to happen because the news on balance has been good. Why does the Fed need to buy these bonds? Now, the question is how far the market sell off from the peak. I think that's somewhere between 3 and 4% overall. Which is kind of what it did the last time. We're about 2.5% into that, like you said. So the same, idea. And you were having good economic news and we sell off. And I would really like it back to the old days where you have good economic news and people are happy about that. So I don't think that's very far away, but it ain't happening this week. So, I think we almost need something bad to happen in the economy for the market to rally. But I think overall, at least the broader market is going to be a little soft here for a while.
That argument is as old as the Fed. Do they focus too much on inflation? Is anything good, therefore bad in their eyes? That goes back to before Greenspan's day, even in terms of people having that battle. I think we'll be having that battle a lot in the coming weeks and months as the data seems to point towards an increase in all of that fun stuff that the Fed loves to hate. And speaking of things you love to hate, hopefully you don't love to hate this show, but if you do, you should be happy because it's over. We're done. But of course, before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their necks of the woods. That may start with you. And once again, we'll bring the new guy to the fore, give him pride of place. Mr. Kevin, what is cooking over there in the land of RCM Asset Management?
Well, we got a whole bunch of hot commodity markets on my desk. Something of particular interest is a CTA, kind of an emerging guy that we are fortunate enough to handle investor relations for. He's got a bit of a theme-based, rates higher, bonds lower. So from a timing standpoint, there's the potential to strike while the iron's hot. It's a guy with, in my estimation, an excellent pedigree, comes from a floor-based background, and he has worked with some heavyweights in the business, Lee Cooperman's Omega Fund. So that is new and exciting, and if there are guys out there that would like to know more about the Infinity Treasury Trading Program, they should give me a call.
And how would they get in touch with you if they are so inclined?
My number is 312-870-1520, and you could also find it on our website, which is rcmfutures.com.
Yeah, check out the Futures tab. I know there's been some confusion in the past. There's kind of the main RCM tab, and that doesn't have all that info on it. And you have to kind of click through to get to the Futures stuff. That's why I wanted to make sure you reiterate that for our listeners here, because there are kind of these separate tabs over there at RCM. If you want to get in touch with Kevin or, of course, Matt or any of the Futures guys over there, click on that Futures tab, and that'll get you more of the relevant contact info. And Signor Giovinazzi, what is cooking in the land of the pit?
I'm actually, my head's here. My head is right here. I know that's freaking you out a little bit, but I just wanted to let you know. I know it's not going to help your listeners tonight, but it will help your listeners tomorrow. Mark is giving a risk management lab tonight at 9 p.m. But for all the option, all of the people on the Option Insider Radio Network, you will be able to download the video tomorrow because we'll post it to our website. So it's 9 p.m. Eastern time tonight. And if you surf on over to optionpit.com, and just do the global search for managing risk. It will be the first thing that pops up, and then you could see Mark Sebastian at his best helping people managing risk in their retail accounts.
All right, and speaking of people at their best, we've saved the best for last. Good old Alex Jacobson, the major domo of education over there at OX. Mr. Alex, what is cooking in the land of OX from an educational perspective?
A full schedule of webinars. I'll just showcase a couple. Monday at 1 p.m., talking about short call strategies. And then Tuesday at 1 p.m., Marty Kearney, my old buddy from the SIBO, from the Options Institute, is going to do a general option Q&A. Live events come back next Saturday. We're going to be in Boston. Everything is free. Just come to the site. You can register. All the webinars are free. All the live events are free. And we look forward to people coming to the webinars or attending the live event.
And on behalf of Alex and Andrew and Kevin, and of course Uncle Mike, who couldn't be here today, I'd like to thank all of you out there in the listening audience for downloading and streaming and subscribing to this fine program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.